Hello everyone, Ignatius Jackson CPA here with another exciting video for you. So today we're talking about the employee retention tax credit, okay? I wanted to do a more in-depth video on the qualifications for the employee retention credit. I've done one previously, but I wanted to go ahead and update it because it was a long time ago when the legislation just first came out. And so I wanted to kind of update it with some of the key changes and things that have happened since then, to just let you guys know a little bit of a summary of what you can and can't do in relation to the ERC stuff. So we talked about in a previous video about ERC scams and some of the stuff that people are getting advertised and sold on. So be careful about those. Go check out that video if you haven't seen it yet. And go ahead and stick around for this one to learn a little bit more about what you can and can't do and how you can qualify for the employee retention credit. We will be right back in a second. Alright everyone, and we're back. So, the employee retention tax credit, or also sometimes referred to as the employee retention credit, or also sometimes referred to as the ERC, okay? So, as an abbreviated terminology. So, this is an awesome credit that's available to people, okay, that have small businesses, that have employees, true employees, W-2 employees, not contractors. You know, we're not playing around with this whole game of, oh, we're going to pay you as a 1099 and then try to claim the ERC, just like the PPP, same thing. Like, you can't have your cake and eat it too. So if you have been treating people like employees, okay, between the early parts of 2020, so first quarter of 2020 through third quarter, actually all the way through the end of 2021, depending on what type of business you are, you could be eligible for the employee retention credit, okay? So if you have a business that operated during that time period, you might want to tune in because you might be able to save yourself some money and get some money back on your payroll taxes, and then save yourself some money overall with the government, okay? So here's some of the rules. I just want to break these down for you, give you a little bit of flavor, and explain what the employee retention credit is so you can kind of understand what it is and how you go about claiming it, okay? So there's two different types of credits. There's one for 2020. There's actually three, I apologize. One for 2020, one for 2021 that includes just the first 3 quarters of 2021. And then there's a third type of credit called the Recovery Startup Business Credit, which is for just Q3 and Q4 of 2021. So we're going to talk first about the employee retention credit for 2020, and we're going to go through all the rules that are associated with that, which are pretty much the same rules for the other two as well, except there's a little bit tweaks here and there, and we're going to talk through those tweaks, but just kind of keep some of the stuff in mind that we're talking about for the 2020 credit, as it's going to pertain to some of the other credits that we're going to talk about here later, okay? So the first thing is the employee retention credit for 2020. You can get up to 50% of your employee's wages, up to a maximum of $10,000 of that employee's wages for the whole year of 2020, okay? And this is going to be a credit that you're going to take on your 941 tax return, do an amended 941, and that's going to give you a refund from the IRS for payroll taxes that you paid. And if you didn't pay enough payroll taxes, then they're going to go ahead and just send you a refund check for whatever you didn't pay for, okay? So the credit is allowed. So it's a 50% credit of the wages, right? Qualified wages that you're paying to an employee during a calendar quarter, up to $10,000 per employee for the whole year of 2020, okay? Now, the credit is allowed whenever you meet one of two criteria. One of two criteria, all right? Your business was shut down by a governmental order, either a full or partial suspension or shutdown of your business due to a governmental order, okay? And we talked about this before on the ERC scam video. That's not just some willy-nilly order. Like, has to legitimately say you cannot operate your business, and you're not an essential business, and there was no exception to the rule for you. You cannot operate your business, okay? So due to some governmental order, then that's one way to qualify. The second way you qualify is a 50% or more reduction in your revenues, this is for 2020, remember, 50% or more reduction in your revenues for 2020 when you compare it to the same quarter in 2019. So you take Q2 2020, compare that to Q2 2019, and if that is 50% less in 2020 than it was in 2019, then you now qualify for the ERC for that quarter, okay? And you continue to qualify until you get back up to 80% of your revenues in a following quarter. So for example, if you qualify in one quarter, in let's say Q2 of 2020, you have 50% less in revenues than you did in Q2 of 2019, then you're going to qualify for at least 2 quarters by default, because you won't be able to know if you got 80% or not until you get to that second quarter. So you're going to qualify for Q2 and Q3 of 2020 if you qualified for Q2 of 2020 based on the revenues figure. Okay? So, and then if you get to 80% in Q3 of 2020 compared to Q3 of 2019, then you stop qualifying as of Q4 of 2020. Okay? So that's how you determine that revenue test. Okay? Now, if you qualify under the full or partial suspension due to a governmental order, what you have to do is figure out what time period was that order effective for. And that's the only time period that you can qualify for the employee retention credit. So you're only going to be able to pay for or get credit for wages during that time period that you were under a full or partial suspension due to a government order. Okay? You're not going to be able to get it for a whole quarter or anything like that. It's only that time period that you're under full or partial suspension. So there's a lot of places around the country that were shut down for quite a bit of time during 2020. So those types of places, you have a higher chance of qualifying for this if you were still paying your employees than you do in some other places. Now, keep in mind as well, you had to still pay your employees. So if you just laid everybody off and stopped operating because the government wouldn't let you operate and you didn't pay anybody, well, then you don't qualify for this credit. Okay? So you're not going to qualify if that's what you did. All right? So yeah, you have to pay employees during the quarter to claim the credit, because you're claiming the credit against the wages that you paid that employee during that quarter. And again, it's up to 50%, up to $10,000 of wages for all of 2020. All the quarters that you qualify in 2020 combined together, you can get a max of 50% or $5,000 basically of the $10,000 of wages that your employee claimed. Okay? Or that you paid your employee, excuse me. Okay, so one thing I want to mention as well, related individuals are not eligible for an ERC credit, okay? That's going to be you yourself as the business owner. It includes your spouse. It includes a child or a descendant of a child, a brother, sister, stepbrother, or stepsister, a father or mother, or an ancestor of either, so your grandparents as well, a stepfather or stepmother, a niece or nephew, an aunt or uncle, a son-in-law, daughter-in-law, father-in-law, mother-in-law, brother-in-law, or sister-in-law, and any other individual who has the same principal residence of abode as you and is a member of your taxpayer's household. Okay, so it's going to include all those people. If any of those people are on your payroll, you cannot claim the ERC credit for those individuals. So just kind of keep that in mind. This is a very strict rule on this one. It's not like the PPP where even you as the business owner got to claim a portion of that for yourself. And same thing with your spouse and your kids if they were legitimate employees. You can't do the same thing that you did with the PPP that you can with the ERC. Okay, so certain people are going to be disqualified from claiming this credit, or for you claiming the credit for them. So keep that in mind. It's if you ever want to read it, it's Notice 2021-49 discusses this, and it's going to be section 152 D2 of the Internal Revenue Code. Okay, so if you feel like going out there and reading about it, that's what we're talking about here. Okay. All right, so that's that. Now, the eligible wages. Okay, so here's the time period for 2020 that's eligible. All wages paid from March 12th of 2020 through December 31st of 2020 are eligible. So if you paid any wages prior to March 12th of 2020, it's not going to be eligible for the employee retention credit, even if you qualify for Q1 of 2020 because your revenues decreased substantially. you're not going to qualify for the full quarter. It's only March 12th through the end of March 31st for the first quarter. Okay, so just keep that in mind as well. And depending on how many employees you have, you want to talk to someone just to make sure that you can still qualify for this. So if you have 100 employees or less during 2020, then you pretty much are going to qualify as long as you meet one of those criteria in terms of the 50% reduction in gross receipts or being shut down by the governmental order. As long as you meet one of those requirements, you're going to qualify. If you have more than 100 employees, you can only qualify for employees that you paid not to work, basically, essentially, is how that's going to work. So just consult with someone if you're over that 100 employee limit for 2020, because you may not be able to get the full credit that you might have thought you would get. So those are some of the key things that to consider and think about. And again, how you file for that credit for 2020 is you would amend your 941 tax return. If you don't know what a 941 is, it's the payroll tax form that you file every quarter, or your payroll company files every quarter to the IRS to tell them how much you paid in payroll for that quarter and how much in taxes you withheld, and et cetera, et cetera. And they compare that to the deposits that you made throughout the quarter. And as long as everything reconciles, then they leave you alone, unless you file an amended return. Okay, in which case they'll go ahead and process that and send you some letters to say yes or no. Okay, so that's what that's for. All right, now 2021. Let's talk about 2021 next. So for 2021 tax year, for the first 3 quarters of 2021, Q1, 2, and 3 of 2021, you would compare those to Q1, 2, and 3 of 2019. Okay, and if you qualify for Q1, 2, or 3 of 2019 compared to Q1, 2, or 3 of 2021 by having an 80% reduction, or excuse me, a 20% reduction in gross receipts. So if you just have 20% reduction in gross receipts for those 3 quarters, then you're going to qualify for the employee retention credit in 2021. They made it a lower requirement to qualify in 2021 because people were starting to get back up to their normal operating levels, but some people were still struggling. So they made it a little bit easier to qualify in 2021 for businesses that were still struggling a little bit. But nevertheless, you have to have that 20% reduction or still be shut down by a governmental order, either full or partial suspension by a governmental order. Now, I will tell you, by 2021, most places, with the exception of places like California, New York, etc., were pretty much fully back open during the pandemic. So that the full or partial suspension is going to be a little bit harder to do during 2021 because there was quite a few places that had just completely opened back up at that point. So there was really no governmental orders that were stopping people from doing stuff. But there could be something that's in your industry that, again, that will make you qualify for that particular location that you're at. Okay, so just keep that in mind. The same kind of qualifications. The only difference is you only need to prove a 20% reduction in gross receipts for the first 3 quarters of 2021 in order to qualify for the ERC. Okay, for 2021. And then the wages that are eligible for 2021 for the first 3 quarters of 2021 are going to be 70% of the wages up to $10,000 per quarter. So it's not $10,000 per year for 2021, it's per quarter that qualifies for each employee. Okay, so you can get $7,000 per quarter in 2021 for your employee, for each employee. All right, so that's a huge difference between 2020 and 2021. 2 key differences. One, the revenue test is only 20% compared to 50% in 2020. So in 2021 is 20% reduction. In 2020, you had to have a 50% reduction in revenues for a quarter. Okay. The other key difference is the limit on the employees. Instead of being 50% of the wages in 2020, it's 70% of the wages in 2021, and it's per quarter, not per year like it was in 2020. So a couple key differences there between 2020 ERC and 2021 ERC that you should know and understand. Okay. Again, you're comparing it to 2019, not 2020. Comparing 2021 to 2019, not to 2020. Okay, so you still have to have lower gross receipts in 2021 compared to 2019 to qualify under that test. Now, there is one other exception that happened with 2021 where you can actually qualify by using a previous quarter for the current quarter. What that means is you take, for example, Q4 of 2020, compare that to Q4 of 2019, and if that is 20% or less, right, in terms of revenue, or 20% or more, excuse me, in terms of your revenue reduction, then in that case, you would qualify for Q1 of 21 based on the revenue tests for Q4 of 2020. So it gets a little confusing there, which is why you definitely want to have a professional help you out in terms of calculating some of this stuff to make sure you actually qualify and then help you with the 941. But please, like I said in the previous video, don't pay these guys so much money to do these freaking ERC claims, especially if you're a smaller business. I mean, the smaller businesses are fairly straightforward and fairly easy to go through. Unless you're trying to qualify under full or partial suspension of a governmental order. If you're qualifying under a revenue test, it's pretty simple to go through and figure that out. Okay, so don't pay these guys tons of money. Those are the key differences between the first 3 quarters of 21 and the 2020 quarters that were eligible. Okay, now there's a third, as you remember at the beginning of the video, I said there was a third level that you can qualify under. Okay, so let's say you weren't around in 2019. All right, let's say you started your business in 2020 or in 2021. So they created this nifty little thing that's called a recovery startup business. Okay, a recovery startup business is any business that has annual gross receipts less than $1 million. So if you started a new business and you killed it right away and you got more than $1 million, you're not going to meet this threshold, unfortunately. But so it's for a place that has less than $1 million annual gross receipts on average for the time period that you've been operating, okay? And you must have begun carrying on your business after February 15th of 2020. So you can't have a business that started in 2019 or the early parts of 2020. It has to be after February 15th of 2020, which is their official date of when they said the pandemic really started. It has to be after that date that you started this business. If you do, then you qualify under the recovery startup business portion of the employee retention credit. The great thing about this is if you qualify underneath that, you don't have to prove a revenue reduction or a full or partial suspension. You automatically qualify just by being a new business that started after February 15th of 2020 and you had less than $1 million in gross receipts. Okay. Now, I want to be clear on this. If you have other businesses that you own, you're not going to qualify for this. And those businesses were all started before February 15th, 2020. You're not going to qualify for this. I shouldn't say all. Any business that you own that was started before February 15th, 2020, if you have one, you're not qualifying for this portion of this. So you're going to have to go through the full ERC testing to see if you qualify under the revenue reduction or full or partial suspension. All right? Because you have to aggregate your businesses together in terms of determining some of these rules and qualifications. All right. So you're not going to qualify if you have a recovery startup business a business that you started prior to February 15th, 2020. Because if that was the case, everybody and their mama would have started a new business after February 15th, 2020 and claimed this credit. So that's why they didn't do that, right? Because it just doesn't make logical sense to say, oh yeah, anybody can go start a business and claim this credit. No, that's not going to work, guys. They've given away too much money as it is. So, all right, now if you qualify for the recovery startup business, you're limited to $50,000 total each quarter for all employees, and it's still capped at the 70% of $10,000 of wages per quarter. So you still have the 70% up to $10,000 of wages per employee per quarter. But the total that you can claim for all employees for each quarter is $50,000 only. Okay? So, and I've done a few of these recovery startup businesses for some of my clients that started up during the pandemic, and it has saved them a ton of money. I have one business that got the full $100,000 back. So you can get $50,000 for each quarter. They got the full $100,000 back. I have another business that got, I think, about $85,000 back because they didn't have enough payroll to get the full $100,000. So yeah, I mean, this is a very powerful tool that a lot of people don't know about. So I wanted to make sure I explained that this exists. So if you're a new business owner that started your business after February 15th, 2020, and you have employees that you're paying a W-2 to, you're paying payroll wages to, you could qualify for this employer retention credit for Q3 and Q4 of 2021. Okay? So, and to be clear, only recovery startup businesses can claim an ERC for Q4 of 2021. All right. And these are still claimed on an amended 941. Okay. Because all these quarters have passed. After Q4 of 2021, the ERC is dead. It's not around anymore. Okay. There's no more claiming the ERC after Q4 of 2021 for now. Who knows what they might try to do? I mean, the government loves spending money right now. So we'll see. I don't know. Hopefully they don't extend it and they don't make it any, they don't spend any more money because, yes, inflation is killing us all. Okay. So, well, that was a video. That was a video about the employee retention credit. Okay. Thank you everybody for tuning in. If you have any questions, comments, thoughts, all that good stuff, feel free to leave them in the comment section and we'll get back with you. Or you can shoot us an email or give us a call. Okay. So, and if you need any help with potentially claiming an ERC, especially if you're doing the recovery startup business, go ahead and give us a call. Again, if you qualify as a recovery startup business, definitely do not pay people 20% of your refund or 10% or even 10%. I mean, that's just crazy. Like, that's way too much. It doesn't take that much effort to do the ERC claim for a recovery startup business. So please be smart with what you're doing. And don't be overly aggressive with the ERC stuff. Please don't be overly aggressive. Go and watch my previous video on the ERC scams. I'm actually going to probably do another video here where I'm going to play some voicemails, and I might even call one of these places to see what they say, just because I think it's going to be a cool little thing for me to do. So anyways, thanks everybody for tuning in. Hope everybody has a good one, and we'll talk to you later. Peace.